Welcome back all to another lecture in our AML and KYC series, and this is again one of the interesting topics in this universe. We are going to see correspondent banking. I think many of you have heard the term correspondent banking working in AML, CFT, or the KYC domain. Also, those who are preparing for it, they might have also heard, or those who are into banking, they have also heard the term correspondent banking. So, kind of let's see what correspondent banking is and what are the risk or the AML, CTF regulations or checks kind of things that are done here. So, the first, let us focus on what is correspondent banking. So, correspondent banking is basically a arrangement between two banks or say two financial institutions, being them banks. So, what happens is where here one bank provides service on behalf of another bank. The bank that is providing service is known as the correspondent bank, and the bank for whom they are providing the service or the bank that is availing the service is known as the respondent bank. So why is correspondent banking important? Because many of the banks might not have their branches or their reach to certain geographies in the world. Hence, to provide their services in those geographies or those locations, banks comes into this kind of relationship with another banks. So this is the gist of correspondent banking and why is it important. Now the correspondent bank will hold deposit and it will facilitate transaction for the other bank, allowing it to conduct international business and processes or cross-border payments and access to foreign currencies. So, for example, say if I have account in say bank A, which is present at my location, and I have moved to a location B, but I am not confident on any other banks. I am happy with banks A's services. So I would like to go ahead and continue my services with Bank A. So in this case, if Bank A has any correspondent banking relationship with, say, a Bank C, then I will get all these kind of services through Bank C via Bank A. So that's why it also helps in kind of customer satisfaction. So that's one thing. So I hope you understood what correspondent banking in general means. Now, types of correspondent banking. So, as I explained you, what is correspondent banking? Now, corresponding banking can be classified into many types based on relationship, based on the way they are here. But I'd like to touch upon this three types of correspondent banking. So, the first one is the traditional correspondence banking. So here the same one bank serve as the correspondent bank to the another bank. So traditional one. Now there is another way, that is the nested correspondent banking relationship. So what happens here is this is a situation where a bank acts as a correspondent bank for another bank, which in turn serves as a correspondent bank for a third bank. So say there are bank A, B, and C. So A is serving as a correspondent bank for B, but B is serving as a correspondent bank for C. So this is where nesting happens. Like one is nested on the other. So it creates a kind of a layered or nested structure in this correspondent banking relationship, and hence the term nested correspondent banking. Now, payable through accounts. This is also kind of relationship in a correspondent banking. So this is what it is kind of a special type of accounts, which kind of allows a bank uh, or the correspondent bank to offer the customer the ability to make payments or conduct transactions through another bank's network. So this is kind of you are paying through the accounts, or you are doing the transactions through the accounts. So pause the video, do have a look at this, do your own research. You will get tons and tons of materials based on this, and you can write down any queries or comments down in the comment section. So let's move forward. So here are few of the terminologies to look at in the corresponding banking world system. So the Nostro and Vostro accounts. So many a times these two terminologies are heard in this regards, in the corresponding bank regards. So what is a Nostro accounts? These accounts are held by a bank in foreign currency at other bank, allowing the bank to manage foreign currency transactions. Vostro accounts. These accounts are held by a foreign bank in the domestic bank's currency, facilitating transactions for foreign clients. Now, I guess it is self-explanatory, but however, the main difference between a Nostro and a Vostro account is in Nostro, whatever the deposits that are held in the correspondent bank's accounts are in a foreign currency. And in a Vostro account, whatever the deposit that is held in the bank's account is in the domestic currency. So that is the main difference in the Nostro and Vostro accounts. So how this helps the customers, you can go ahead and definitely have a look at it. You can go ahead and research from Google or any other sources, and you will get to know what are the importance of Nostro and Vostro accounts. So let's move ahead. Now I have told you the benefits of correspondent banking. That is, you are getting access to the preferred bank in a non-serviceable location. Also, types of correspondent banking, all those we have covered. Now, if correspondent banking is such a good one, then why are there regulations affecting it? So basically because there are risks associated with a correspondent banking. Since it is kind of a layered relationship. Hence, there are also multiple risks associated with a correspondent banking. So for our lecture, we will mainly focus on the compliance and regulatory risk. That is the AML CTF kind of a risk. But there are also other risks associated which we will cover. So the first, let us go through it. The first would be the compliance and regulatory risk. So the AML risk, that is the failure to comply with AML regulations, can lead to significant penalty and reputational damage. So as usual, if the AML policies are violated, then definitely there would be penalties and reputational damage. Then KYC risk, because why there is a KYC risk or the AML risk? Because in a normal banking relationship, when you enter a relationship with your bank, they know you directly. It is customer and bank. So there is a kind of clarity between the bank and the customer, bank's mind. Now in correspondent banking, bank A is serving clients or customers of bank B who are based in a different location. So bank A do not know the customers of bank B that well. So there is always a risk of going ahead with like people claiming or the customer claiming to be someone else, and at the end they might turn out to be someone else, or a business claiming to be someone else and they might turn out to be something different. So there is this AML KYC risk. Again, similarly, there is a sanctions risk. Say for example, your bank has robust robust AML programs. You are scanning your entire database. You scan every customer to the global sanctions list. However, when you are into a correspondent banking relationship, say a person C from any other geography with whom you are in the relationship with will transfer through your bank. However, due to poor due diligence of the other bank, it might happen that the person C is in a sanctions program and they have transacted through your bank. So there is always this kind of sanctions risk. So these are the risks that is from the compliance or regulatory side. Now let us look at what other risks are present. There is also credit risk. the risk of default by any parties. Then there are operational risk. You don't know the people, management, anything of this the other bank. There might be default in there. Cyber risk, since your bank is giving access to the bank B, if there is a cyber attack on bank B, it might happen that your firewall or your services may get compromised. There is a cyber risk. Then reputation risk, we already talked about. If your bank is involved into a correspondent relationship and some fraud happens, definitely reputational risk is there, because clients, business might come up and think that this institution is not able to safeguard itself from correspondent banking risk. So why should we go ahead and open accounts with this bank when they are not able to even care for themselves? Will my money be safe? So this kind of risk in the market comes up. Then there are the market risk like liquidity risk, there are currency risk. So all these kind of risks are involved in a corresponding banking relationship. So let's continue to one of the topics in the AML CTF KYC pointers. So there are multiple ways in which correspondent banking relationship works, and for various institutions, for various geographies, for various regulations, there are multiple checks. However, I have just gone ahead and kind of quantified the major checks or major things that are in common in all those things. So the first thing is the due diligence. Whenever there is a correspondent banking relationship to begin with, if a bank B comes as a respondent bank to you, so their due diligence from the correspondent bank's end is a must. They must go through each and everything to ensure that the relation that they are getting with another bank is 100% secure, or they must do proper due diligence about the respondent bank. So once this due diligence is carried out, we or the correspondent banks, to maintain the relationship or establish the relationship, require approval from senior officers or senior management. So this is required. The third thing is there should be written record of assessments. What were done, how was the assessment done, how was the due diligence done, what were the things that were asked to the respondent banks, what were the things that the respondent bank has replied back, then like what were the guidelines, regulatory compliance, what are the laws, regulations, everything down to the last point should be maintained in a record. Then the fourth thing is that kind of is seen is prohibitions with shell banks. So majority of the time, majorly, you can say 100% of the time, shell banks are not onboarded as a respondent bank. So these are kind of uh, you can say a gist of the things that happens when a relationship starts as a correspondent banking relationship. So let's look at the due diligence. Whenever there is a relationship set up, we go ahead with both initial and ongoing due diligence. This is very important for a corresponding banking's point of view. So what are the things that are looked at? Again, the list is comprehensive. There are many things. I have just captured some of the things. If you go ahead and do your own independent research, you will find tons and tons of things. So let's go ahead and see some of them. The first is ownership, control, and structure. So what does this mean? This means that here the correspondent bank tries to understand the ownership, the control structure, and the management structure of the respondent bank. So few pointers that are looked into is listings. Say for example, is the respondent bank a listed bank, publicly listed bank, or whether it is privately held bank? So these kind of things are looked at. So next, are these markets or wherever these are listed, Are these governed by robust AML regulations or CTF regulations or not? So these are also kind of seen. You can get it from the global like regulations, policies, and everything. You can get it from FATF, OFAC, or the regulatory authorities that are present in the jurisdiction. You can get those, and you can verify that whether these markets are governed by these robust regulations or not. Then we also see who are the beneficial owners of the respondent bank. That means we are drilling down into the ownership structure, the beneficial ownership structure. We will go ahead and find out the beneficial owners. We'll do the due diligence of beneficial owners. We have covered it in a different lecture. So if you want to go ahead and check it out, you can check it out how due diligence of beneficial owners are done. So as you know, beneficial owners ultimately would be a natural person as per the guideline setup. So we will be doing the KYC, the due diligence for the beneficial owners. We'll also list out who the beneficial owners are. Then also the expertise or experience of executives and board members or the top management is also seen, like who are those people in the board or the top executives, what is their expertise, how they have managed the bank, what is the management policies. So everything is drilled down whenever we are looking into the ownership control and structure. Then we come ahead and see, are any of them in the PEP list, do any of them has any negative media surrounding them. Then also we go ahead and if it is a publicly listed one, we go ahead and try to find out as much as information available from the open sources. Now open sources can be your Google search or any other search, or the bank's own website. So we can find out many information about these like products, services, what they are using, what are the types of customer, where are they located. So a organization kind of gives all this information in their website, like from where have they started, who are the people involved. So these kind of things are also we can go ahead and see from there. Then last, regulated annual returns. So what were the returns and all, but it should be a regulated one, not like somebody came and told you that we got a information in a third party website, we are taking it. No, it should be a regulated annual returns. Then again, adverse media. So kind of in the due diligence segment, we are seeing that the respondent bank that has come to your bank to establish a correspondent banking relationship is whom they claim to be, and they are 100% safe to do business with. So this is why this kind of due diligence is done. The next part is the nature of business. So we saw in the first part that we went ahead and checked the ownership and the structure of the management kind of control and management. Now the next thing that is looked at the nature of business. So here, character, size, or complexity of the respondent bank's business is seen, including products, customers, transaction types. So these information are seen in when we do this kind of due diligence. Now also we see type of delivery channel and services offered, types of businesses that the respondent bank is serving, types of customer that they are serving. So these kind of things. Now you know what delivery channel means, right? So how the respondent bank is in touch with their kind of clients or the customer, whether it is through a POS, whether it is through a ATM, whether it is through online method, or whether it is a branch banking. So these kind of things are also seen. Why this is seen? Because this helps us in determining what kind of verification or the physical verification, or you can say the visual verification has been done when onboarding those clients into the respondent bank. So this kind of helps in that. The next thing that we see is the foreign countries or jurisdiction that is there present. So let's say the respondent bank B comes from a jurisdiction which is in a high risk zone, and they want to establish a relationship with your bank. So there we will go ahead and check from where this is coming. Sometimes what happens, there are international banks which has multiple branches all over the world. They also come into a correspondent banking relationship with other international banks. So in this case we go ahead and check the jurisdiction. So what we do is We first look, are there any group-wide AML or CTF controls applicable to all parts of the respondent bank? Now here two things, like entire respondent bank is seen. It's like where they are located, wherever in the world they have branches. So these kind of things, whether they are into some high risk jurisdiction or say places where it is known that criminal activities are done and they have maximum of their business from those areas. Also, they have accounts or branches available in other areas. So these things, then what are the relevant AML, CTF laws that are present in that jurisdiction or that foreign countries. So let's say there are two banks, one is from UK and one is from USA, and they want to come into a correspondent banking relationship. So if the correspondent bank is from UK and the bank that wants to be the respondent is from US, UK might go ahead and check what are all the AML CTF regulations or laws that are followed in US, like how it is governed, how well they are supervised and enforced, and those things they will see. Also, they will also go ahead and see that how the bank, respondent bank, has been supervised and how these laws are enforced within the bank. What compliance processes have the respondent bank adopted or have been following? And like strength of their AML internal policies, like have they trained their employees? Are they conducting refreshers? Are they keeping records? Those kind of things, everything that governs the AML policies, regulations are looked into this in this thing. Now, next, go on to the ongoing due diligence. So this was kind of the initial due diligence that we do. Now, once we have done our initial due diligence and we find out that it is okay to be in business with that respondent bank, we will go ahead and follow the previous steps, that is getting approval for from the senior management, then going ahead, written documentation and everything. So these things will be going ahead and doing. Now, ongoing due diligence. So it is not like that once the correspondent bank relationship is kind of established, you will not go ahead and do anything. For us, a correspondent banking relationship, every time ongoing due diligence should be done. So these include pointers such as changes in behavior, continuous transaction monitoring is required. Like transactions are monitored if they are from any high risk zones or any areas where criminal activities are there, or anything or any areas where sudden political changes have happened and these are under global rules and regulations or sanctions. So these kind of things are monitored, or the transactions are continuously monitored. Then material changes in management of ownership. Say you have come into a relationship at the time when the CEO was a well-known person with high moral standards and dignity, and suddenly for some reason entire board has resigned, entire board has gone away, or say the CFO has gone away or the compliance officer has gone away. So these kind of material changes in management or ownership, let's say someone has bought the bank, so these kind of things are always monitored. Then again, adverse media screening, if there are any negative news going on, then PEP monitoring, continuous it is being done, like whether any PEP is involved or not. Then changes in global AML CTF rules. This is also monitored. Let's say a jurisdiction was today safe and tomorrow for some reasons the international body has marked it as a no business zone or high risk zone or a sanctions zone. Then it will again affect the relationship that you have established with. So these are the things that are continuously monitored in the ongoing due diligence phase. So this is how the correspondent banking revolves and rotates around the laws and regulations to keep its customer and itself safe from any fraud or fraud or any attacks. So let's see a real life case. So you can Google this case. You will find out many things about it. Just I am giving you the case. So this was one of the instances where correspondent banking relationship was used to launder money. So here what happened is Deutsche Bank uh, was involved in between 2011 and 2015. So kind of $10 billion were done in mirror trades. Now mirror trades are what is where same quantity of stocks was bought and sold. So like they were selling stocks in one of the Moscow branches of Deutsche Bank, and similarly at the time same things were done in the London market. So kind of to show that it was legitimate, London and Moscow were kind of going ahead and doing this thing with a corresponding banking relationship. So if you want to learn in deep about this case, you can go ahead and search it in Google and get to know how this was done. So this is just an example. So that's it from my end, guys, and thank you so much for your support. We are just two away from reaching our mark of 900 subscribers, which is huge. I when I started this, I never expected I would be reaching 900 subscribers. But thank you once again for your love and support. Please keep subscribing and do comment down whatever you feel like. Was it apt? Do you want me to add any examples more? Or whatever there is. So please comment down and please like, share, and subscribe. Thank you so much. We'll see you in a next video.